It's Keith Prather here with the Powersports update for NCM. So the Powersports Equipment Leading Index, again, this is a leading index that gives us an idea of what demand is going to be like over the next 6 months. Actually came in stronger than many of the other indexes that we have, and so Powersports kind of leaning into a little bit of some of the big demographic trends we see, and people trying to get out and get about, some improvements in tax refunds. I'm going to talk about some of that in a minute, and how maybe it favored Powersports more than maybe some of the other segments. But right now, the April index came in at 88.8, down just slightly from 89.2, but still at the upper end of a range that is very strong historically. And it was only 0.4% lower month over month, and about 1.2% lower than this peak that we saw last year. But still, overall, good performance. Looks like the outlook is favorable. Again, depending on kind of what we see happening in other parts of the market. There we go. So the other thing too, the retail sales index though, down 1.1% year over year. You can still see though that it's right at the long-term average, which is fantastic, and about 0.4% higher over the last 3 months, when we look at the 3 month moving average. But I want to talk about some of the underlying factors. I don't have it in here, but one of the things that does happen when we see a surge in gasoline prices is that sometimes you do see a shift into different types of motorcycle ownership. And you see people trading in, especially if they're commuting. And we do have more commuters today than we did 2 or 3 years ago. And the commuter market now kind of moving into more of the commuter bikes, in the middleweight segments, as we kind of say. And so we are seeing some growth there. That middleweight shift is more structural and not cyclical, meaning when we look at a structural shift, it's more permanent. A cyclical shift would be, hey, you know what, prices are high right now. I'm going to go buy a middleweight bike, and then or middleweight segment, something in that segment, and then a year from now, when when prices come down and we see it being a little more affordable, I'll go buy something a little bit bigger or a little bit different. And so this is basically a structural thing. We see customers right now kind of settling into that $5,000 to $10,000 middleweight segment. It's a size issue, it's a storage issue, it's what they're using, whether they're commuting on it or the other uses that they have for it. And so it might not be just purely being driven by something cultural. It's a little more of a like a necessity, a need. I need to get out. I need to use a certain type of vehicle, certain types of power sports equipment. This is the one I'm going to go do. So economic conditions over the last 3 years just really reflect that tight fundamental shift in what buyers can afford, especially those that are commuting. And if they're using it for commuting, whether it's to school or whether it's to work or whatever it might be. But there's also a lot of new brands out there that are coming out with this sub $7,000 unit, just trying to jump into and to grab the whole middle range of those product categories. And that's again, probably a reflection on maybe longer term trends that we see at the consumer level, and maybe this bigger impact of inflation kind of hitting wages and just making it so it's very difficult for them to look at anything a lot more expensive. For the second half of the year, though, we're still looking for. I always find it interesting. There's one of the chief economists that I love to follow is Mohammed El-Arian. He's all over the news, and you see him all the time. But years ago, one of the things that he said, not to ever forget, is that we're always looking for a global growth catalyst. We're looking for something to be that one tip of the pyramid, or the kind of thing that kind of tips the pendulum to swing in a different direction. And we're looking for that big catalyst, and whatever that is. And right now, it's not really visible outside of the Middle East conflict. Now, again, I think it actually becomes a little bit of a tailwind for the power sports segment, because if you think about it, in every cycle where we've had higher fuel prices, we've seen an improvement in actual motorcycle sales, and the not the entire category, but just motorcycle sales specifically, especially in commuter bikes, and some of those that are obviously way more fuel efficient. And so we're sort of watching that. We know that the tax refund cycle provided a nice short-term demand lift in Q1. We know that those tax refunds were significant, and it really helped with lower price point categories like power sports, whereas like an automotive or RV or even marine has less of an impact. It's the refunds are too small. It doesn't affect those industries as much, but this one really got a benefit from it, and so that's interesting. But we're looking for and we're waiting on this critical resolution in the Strait of Hormuz, and it opens up borrowing in all types of different categories across the whole power sports spectrum. And the key things that we watch is right now headwinds are coming in from um, higher fuel prices, which do hit some segments of power sports. It reduces overall inflation pressure on household budgets, right? So it's, whether it's in energy and utilities that they're paying for, or food, or whatever it might be, anything we do to reduce that inflation is going to help expand those budgets, and especially in power sports, that opens them up to being able to take on, um, you know, more risk, but risk in the sense that the monthly payments they're going to be doing with power sports are going to be much less than maybe what they would with like a brand new automobile. Easing bond yields obviously are another thing that helps bring interest rates down for longer term types of loans, like we would see in power sports. And the biggest thing, though, is just improving consumer sentiment. They just have to feel better about things before they're willing to go free up cash or actually spend cash to go do something discretionary. So that's what we're watching for. And, all four of the five primary headwinds right now are just all tied to that one geopolitical development. And so you get one resolution in that geopolitical development, and all four of those five big headwinds improve instantly, and they get better almost overnight. So one thing I want to talk about too, Generation Alpha, they were born, I think 2014, I think was the start of that generation, and they go up to about 2021, I believe. And what's interesting is, we thought there's a stat that about 80% of that generation had access to a tablet before they were over the age of 2. So they have been just heavy, heavy digital users ever since they were born. And that we thought, maybe that creates a sedentary lifestyle. They don't like to get out, they don't like to go do things. But what we're learning is that sedentary reputation is really overstated. We actually think it's now the opposite of that, that they're so used to having all of these digital assets at their fingertips that they get bored by them now, and that they're thinking that, okay, if most of my life is tied up to digital, what I want to do in my spare time or what I want to do with my leisure time is not that. And so I want to go do something that's outdoors, that is, rough and tumble, physical. And so we're seeing them, gravitate off of that onto anything that's what we're calling off-screen activities now. So getting out and doing things in power sports category overall. So that's interesting. The other thing too is that I'm reading a lot more about is just female riders, that maybe a lot of dealers are not picking up on some nuances that make them incredible customers. Women right now represent about 22% of current U.S. motorcycle owners, and that's double the 10% share that we had in 2009. So almost doubled the share just in the last, 16, 17 years. Female riders, though, get this, spend more than male riders on all the aftermarket accessories and service annually. So they make fantastic customers for dealerships, and the demographic overall is growing, and demonstrably they're a lot less rate sensitive at entry level price points. So they want a lot of amenities, and they want certain colors, and they want things to be exactly the way they want them as they come into this industry, and maybe a little more sensitive than maybe what we see in some of the male population. So it's interesting, but we've got to go in and build programs and marketing to the demographic a lot more aggressively. So I've got a lot of friends just personally who I grew up and we were all Gen Xers, and a lot of the female high school friends that I had are now late in life getting into a lot of the custom bike industry. And I'm always shocked at the first bikes they buy, because they're usually a lot more aggressive and a lot bigger and a lot meaner than what I would expect them to get into in very first bike. But anyway, it's just interesting overall. So that's what I've got with power sports this particular month. I'll broaden it out a little bit more, and we'll talk more about side by sides and some of the other segments when we kind of get another month or two down the road, because there's some interesting things kind of happening there from a buyer perspective. And I think another 30 days will give us a little more clarity into what's happening in the farming community and especially ranching and cattle ranching and how they're buying and or upgrading equipment, especially when it comes to side by sides and some of those other industries. So we will get into more of that later. So, okay. Hope everyone has a fantastic month and we'll see you on the other side. All right. Take care. Bye bye.